Good morning, guys. I hope you're doing well, and welcome to today's edition of 600 Seconds of Trading. My name is Alejandro Zambrano, Chief Market Analyst with TradeCaptain.com. Okay, yes, sorry for the hold up. So let's get going here. We're gonna take a look at the euro. We're going to take a look at Bitcoin. We're gonna take a look at crude, gold, and the DAX 30. Those are the main markets that people trade, and we're gonna provide you guys with a quick little update to see what's going on in these markets. If you want to participate in the chat, it's always nice if you want to say hello. And as well, if you like this presentation, don't forget to click on the video and subscribe to us on YouTube, and as well to click on the like button. Today as well, we have a webinar, a special webinar. It's going to be the top trade ideas for this month, and I'm going to show you guys my ideas on how we can trade. Out of the ideas we looked at last month, we had crude oil, and obviously it's on the front page today in most magazines, but that's something that we didn't necessarily I did definitely not anticipate the situation with the US leaving the nuclear deal with Iran, but I definitely, from a technical perspective, said that if we could have a break to the upside in crude oil prices, we could have a stronger crude oil prices going forward. We did also talk about the euro as well. So join me. It takes place today at 6 p.m. London time. You need to make sure you sign up in the next few hours. It is possible to sign up afterwards, but ideally, you should sign up which is like right now in the morning, really. Okay, let's begin. Hey Juan, thank you so much for joining us. Hope you're having a great day. So let's begin, and we're going to begin with the euro. And the euro is just trading sideways for now. There's not much happening with the euro. The market is again trading sideways, trading just above the 118.64 level. And I think if we take this level out, we're going to reach the December level, which is the 17.15 level, and it's the level I've been watching and mentioning already when the price traded below 21.55. Now, if you want to trade this, I think the best option is to wait for a corrective move. I think we can go back up to pretty much 119, and then from 119, I think traders are going to look to sell, and stop loss orders are going to go just above 119.95. So risk about 100 pip. If we move back to the low, we make almost a 100 pip return, and if we take out the support level here, we'll probably head down to 17.15. And it's very straightforward. It's just simple technical analysis and sort of trying to work things around to our benefit. To give you an idea, we had a very similar setup in the New Zealand dollar over the last few days. So this is a 4-hour New Zealand dollar chart. So I said to our clients that probably sell up here at 70.45, and this could head to the downside, which it did. And then when we're trading down here, I said, if we go up to the prior support level, then traders probably gonna sell here. And again, I have no crystal ball into what the central bank would say, but usually sort of the market gives a little bit of an indication many times to what we can expect. And as well, if you've done your homework on the New Zealand Central Bank, you'll know that there's not really much they were gonna do anyway. They were definitely not going to tell us they're going to be bullish. So the market rolled over from these levels and again plummeted, even though again I had no insight exactly to what the New Zealand Central Bank would say. I did, however, have a view that they're not going to do anything, and following the rate meeting that caused the price to trade lower, they will most likely just maintain that bearish. But I mean, they just lowered their expectations for inflation for next year. So if a central bank is lowering their inflation expectations, that just tells you that there's less need for them to raise interest rates, particularly as inflation is not really high. Now, if you're trading the New Zealand dollar, you can just work with this high here, just above yesterday's high, and I think if we move up to 69.44, I think traders are probably going to sell here. Now, I don't know for certain if it's going to work out, but most likely it will. And the risk is going to be 57 pip. If it moves lower and trade to my target 65.50, then there's going to be a 90 pip one return. And I think this level makes sense at 68.50. You have the actual levels here, the actual lows at 68.19, which is the December 7th low. And we bounce as well here in October and in November. So I don't really think we're going to break below these levels right now. But I could easily see this market hit up and then trade lower. Now if we look at Bitcoin, Bitcoin is on the rise, and the last idea I shared with you guys is just to buy down here. And the market did bounce from these levels already by the end of last month, moved to the upside, and then we went back to the same buy zone, and we had the reaction I wanted to see. Now it's not a particularly strong reaction, but the market did bounce from these levels, and I think when this hits a little bit higher, I think we could potentially be able to reduce a stop loss to this actual low. Right now it's just above the low, so it could easily just go down, but as long as you're above 8,772, then there's no real reason to do anything. Now here is crude oil. As you know, I've been bullish here for quite some time, and the market maintains a very, very strong bias. I don't actually like it too much that it just goes up like this, and and I'm actually long from 68.20 to 68.30, I think it is 68.29 or something like that. So I'm long from pretty much these levels down here. So I'm ranked up a very nice profit so far. So I was risking about 150 pip, and I'm hoping for this to go up here, something about 500 pip. This is the November 14th low. And now the reason why I don't like it too much, because it gets too stretched. So sometimes when it comes back down, I have a lot of people that bought here that shouldn't be buying here because this market is overbought, and then they get panic and then just cause the market to move to the downside. Now technically here, this is a good opportunity to book profits if you're short-term bullish, if you're just more of a scalper. But I'm personally gonna see if I can hold on to this for a little bit longer. Of course, you need to bear in mind that we're dealing with politics here. The things could really escalate, positively and negatively. Maybe they'll have some comments and say, "Whoa, actually, we're gonna do a new sort of deal, whatever," and that could potentially cause this market to just be down here again. So you need to bear that in mind. Now, if things just continue and trade along with the technicals, then I think if we go down to 70 again, I think traders will look to buy here, and most likely they're gonna look to accumulate positions here. And I think it would be fair to reduce the stop loss a little bit. The actual low is down here, but I think we can reduce it a tiny bit. You see this little wick here, and just above this low here, so 68. Actually, sorry, it is possible to reduce it, but let's actually just leave it here. Usually when you push it too much like that, it doesn't make sense. On the other hand, after we create this low, and if we create a low here, so we go down and up, then we'll have sort of this whole section here as support. And at that point, I think we can just put it here at 68.30. But for now, just leave it open, so potentially down and up. And in the best of worlds, maybe all the way up to 63.25 without any break. But I don't think that's gonna happen. All right, this is gold. Not much happening here. Could be a real sort of something that could definitely hit the headlines. You read about this on CNBC and Bloomberg. Obviously it's gonna be after the fact, as it usually is when you read those newspapers, because you have journalists, you don't have actually traders writing those things, which is fine. I mean, that's just the way the world works. So break to 1,301 could potentially cause the market to trade much lower, maybe down to 1263. The alternative is we take out the May high and we could head a little bit higher to the April high. And this is interesting. If you think the euro dollar is bearish, if you think the pound dollar is bearish and we need to have a bounce, then this is probably what you want to work with. Obviously, those markets will bounce, but this is already in a better position to trade higher because it's not in a downtrend. The euro and the pound are in a downtrend, and because of that, it's likely that they're gonna move up a bit, but then people are gonna say, well, we're in a downtrend, let's sell some. So they'll sell. Here, on the other hand, take out this level, and it's just a, a push back up to the upper end of the range, and people will be much more comfortable of buying here. Now here's the German DAX. It's just on fire. We said look to buy here and book profits here, and then we said we take out this high, you can look to go long, and then we said if we pull back, you can look to buy. We didn't pull all the way back to the original entry, and then the market moved up to pretty much 1,300, and over here I said it's probably better to book profits. Now this market is continuing to head to the upside, and it's easy to want to chase. I mean that's what the amateur traders think. They're buying here. Now there's nothing wrong, you can scalp it, you can trade the markets many different ways, but if people just buying with no sort of strategy, this is not the time to buy. And if you're unprofitable, again, this is not the time to buy. However, if you are profitable, you know what you're doing, and you think this is a great opportunity, then yeah, you should just get involved. Personally, I think we need a bit of a pullback to at least 1200, 868, so close to the lows here from the 8th, which is lows from Tuesday. And I think from these levels, traders are probably going to start to build again, and then they're going to go and attack this low. This low here is the January 16th low. So I think that's what people are going to attack, and then if that works out fine, they're going to try to go for this level up here, which is the January 29th high. And that's it. That's today's market update. I don't know if you saw that little pop-up, but with Amana Capital, it's now possible to trade cryptocurrency. So you can trade Ripple, you can trade Bitcoin, and you can trade Litecoin and Ethereum. So sort of the top coins that people trade, and it's a good little alternative to our traditional markets. Why? Well, because sometimes you don't have too much action. Now, thankfully, we have good action in the euro and good opportunities in the euro and the dollar this month, right? Very, very good. But before that, remember, the euro dollar is trading sideways, and you had the pound moving to the upside earlier this year, but it wasn't too much action in the Aussie, not too much action in the New Zealand dollar, because it was just trading sideways. So what's interesting here is that if you have another asset class like cryptos, then that helps, because in cryptos you had a bearish market as currencies were trading sideways, and then you had that bullish move as again currencies were trading sideways. And right now, for example, stock markets have been trading sideways for quite some time. That's not for everybody's liking, so it's a bit boring, right? So if you are pure sort of stuck to one market or one asset class, it can be difficult, without a doubt. Some people say you should become an expert in one market, which is also something that works. But then you need to be an expert on that market when the market trades to the upside, to the downside, and sometimes you have a high volatile uptrend, sometimes you have a low volatile uptrend, sometimes you have a high volatile downtrend, and sometimes you have a low volatile downtrend, and then you trade it in the sideways. So it's not actually as easy as people say. In fact, I have committed to be a trend follower. That's what I said. I don't care about the market, I just follow the trend. And cryptos do offer that, and they do that very well. So check it out. It's good to have that if you're a trend follower like I am, and you're looking for momentum, because right now you have crude, all right, that's moving. But before that, it was a bit choppy if you think about it. And again, stock markets are choppy right now. Do have action in the currencies, but after action, you have boredom, and currencies will start to trade sideways again. So then again, hopefully, stock markets are trending at that time, or maybe cryptos or something else. Okay, guys, we're gonna wrap things up. I want to thank you so much for joining me. If you want to know more about my top trades for this month, click here on education and webinars and sign up for it. It's gonna take place today at 6 p.m. London time. If you can't make it, as long as you are on the go-to meeting registration page, you will get the video within 24 hours of the actual presentation. Okay, guys, have a great day, and thanks so much for watching, and I'll see you guys tomorrow. And if you're on Periscope, just pop by the live trading room. We're not always live on Periscope, but we're always live Monday to Friday here at the live trading room. Have a good trading day, and thanks so much for joining. Thank you.